Good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Thursday, October 9th, and I am so excited to tell you that in just a little bit, we are going to be joined by our favorite returning guest, who might as well, Alex said, be the fourth co-host at this point. Of course, I am talking about William Quigley. But he's not quite here yet, so we've got a little time. If you've got a question you want to share for us, for William, if you're curious or concerned about cryptocurrency, you're in the right place. We're going to do our best to help you out. Alex, how are you doing today?
Can't complain. Can't complain. You know what's kind of cool is I've been messing with this Comet browser, the Perplexity agentic browser.
Yeah, what do you think about it?
It's pretty sweet. I still feel like I'm barely scratching the surface, but it has this neat little thing where you can set you can pre-program prompts to like shortcuts. So I can basically just do like /rums now, and it does my like morning overview the last 24 hours, hitting this, and this, like list these 15 things out for me. Don't have to write the prompt anymore. Just one button, done. Really nice. I think I can automate it too. I just haven't figured that out yet.
How do you mean? You can automate. Does it
like where it just fires at 7:45 every morning? Sends me the thing.
That would be
the overview.
That would be killer. And what are the permissions that you have to give Comet? Refresh us on that, because I remember having some concerns about it.
Yeah, if you wanted to do a thing, you have to give it permission to do the thing. So if you wanted to write your emails for you and read stuff and sort things and do all that, you have to give it access to your email.
And are there limits to what it can do? Could I give it access to my private key?
I don't think so. I don't think that's a thing yet. At least not that I've found.
And is it just based on like what APIs they've built, kind of thing?
There's like a handful of integrations that are native that it can do much more easily, but the Comet, the browser thing, seems to be quite literally anything you can sign into, you can automate. So I would imagine that wallets are a thing. You could give it access to it, but not in a hurry.
Interesting. I am not in a hurry either.
Nope.
I would not want to trust any AI with my private key that was not my local agent. And even then, I just would need to know so much more. I'd need to see so many other people try it and break it before I was like, you know what? Full send.
Yeah, definitely.
We got some questions rolling in. Rada wants to know, can we please get a TA on SOL today? It's been a while. And we have our friend Ahawi. Boy, I'm sorry I butchered your name. Hi, guys from Ireland. What's your take on AI coins and tokens? So, Alex, check this out. I'm going to pretend to be Will Watson and live out my fantasies for about 30 seconds of technical analysis on Solana. You know what Will says? Will says, sometimes it may be good, sometimes it may be shit.
And that's all we can tell you.
That's about all I can tell you. I will say that if you look at the last week for Solana, as somebody who knows and loves this token as an investor, I am expecting it, like everything, to go up or down. And if it goes up,
up or down?
Up or down.
You heard it here first, folks.
Definitely sideways. And the targets that I'm kind of looking at, the next big psychological number you'll look at that we've been struggling with, this is no Fibonacci, this is no retracement, this is nothing like that, 250.
We don't even have candles on our chart.
We don't even have candles. I'm not even in trading view. Like Solomon says, always to the right. Baby.
Correct.
But I'm looking, Alex, at this 250 line. If I was you and I was swing trading a big bag of SOL, probably I would have, bought some extra on this dip, or even if I didn't,
sure did.
Just about anything I could have bought would be in profit right about here, and I'd be looking to de-risk a little at this level. But if Bitcoin rallies higher, I would be starting to look at its previous all-time high, which, depending on where you look at, is like 278, 281, 296. I'd be looking at that higher range for it to try and test some sort of resistance. And something I have heard William say, which still holds true, as he looks at these patterns, Solana, like everything, is in this sort of upward, I forget what he calls it, a wedge trajectory. But speaking as somebody who's known this thing a long while, if we get this sort of rally that some folks are anticipating we could get at the end of the year, then I could see a world where Solana sets a new all-time high. I could see a world where Solana struggles to overcome it. Alex and I have both talked about this. I think we're a little less maybe bullish than Will is, who says he could see. Don't come for me, Will. What is it like past 400 up to the 500s? I would be looking if I started to de-risk at 250. I would be looking to de-risk again at the all-time high, and then keep my like less than 50% of whatever I have now moon bag for like, I don't know, 350 is between 350 and 400. I'd want to be almost entirely out. I would have not a lot of conviction that it was going to stay at that level for a long time. And I do tend to agree with what Bearded commented here. Mr. Watson said, get ready for something in the next 72 hours. It seems like we're at a sort of point where we're dealing with what Will would call key resistance levels, where if we break through, we're going lower, or if we bounce, we're likely going to set that range test. I don't know what he would call it, but that's definitely what I see too. It's an exciting time. I'm excited and feeling more bullish than I was just a couple of weeks ago about what the end of the year will look like. And it's one of the things I'm excited to ask William Quigley about today. As our designated Solana master trader, Alex, do you see something different in the tea leaves? Does it even matter? What do you think?
Hold on, let me ask my mom.
The ringer, Linda, aka the best trader in our community.
This is kind of what I was talking in the group chat about the other day. That I've never really considered making I've like leaned so far into the fact that I can't and don't like to make predictions, because if I've ever made a prediction about anything, it's been basically at gunpoint, and I'm literally just guessing. Straight guess. Because like I could sit here and tell you that, growth on the chain, usage, adoption, all those good things, fees, revenue, yada yada, everything looks good. It makes no sense that SOL is the price that it is. It should be 2 to 3 times higher based on the way that we value cryptocurrencies. That's not a prediction, it's just a general observation. Because I don't trade with leverage and I don't trade perps, I just buy spot and wait for it to be in a better position. I could care less if it goes from here down to 140 and then back to 250. Like, I won't be affected at all. I would simply buy more on the way down. So I apologize, because people want predictions all the time. It literally means nothing coming from me. I could make up a number to make you happy, but it literally means nothing. Yeah. So I don't know, just like Evan said, I have no clue where the price is going to go in the short term. I am very bullish on it overall. I would take profits at 250 because my last buy was 196, and then I would look again, north of 260. I don't really see, there's no other like psychological number until 275. So I would take profits there. If it falls back down below, 210, I'll probably buy some. If it rockets past 300, you bet your ass I'll sell a good bit. I don't know. Like, I do wish that I could make a prediction that like meant a little bit more than just straight nonsense, but
I want to shout out the Chill Whale in the comments who says, you guys say something different every week. And first of all, Alex, I feel like you and I are actually pretty consistent.
Say the same shit every time anyone asks me, dude.
But also, that's because it changes. It changes. There is a macro picture, which is sort of a global, contextual, multifactorial thing that all of this sits in. But there are all these micro events. It was not part of the macro picture a couple of weeks ago that CZ and Binance were going to sell to their market makers and other exchanges, and it wasn't in the picture that Aster was going to have all these incentives to take stuff away from Hyperliquid, and it wasn't in the picture that meme coin frenzy was popping up on Binance, and then it was. And who's the target of that? Well, Solana's first in line to take a hit. ETH experiences significant, you know what I mean? Like, that's not a crystal ball thing. That's a micro thing. It changes. It would be silly of us like not to take that significant factor into consideration.
Yeah.
So
No,
if
it's
your favorite, talking head on the internet isn't able to like process things dynamically in real time and give you context, my friend, you might be in a cult.
the death of nuance is an epidemic in this country and then more broadly, particularly here. That absolutely hits when you're talking about looking at what markets are doing, because like Evan just said, new ingredients are introduced every 10 seconds. If you're incapable of looking at new information, processing it, and being open to changing your mind because something could inform the thesis to change in one direction or another, I just think you're fucking stupid. So I'm sorry, but like if you're constantly intaking new information and you never ever adjust perspective based on any of that new info, even if the adjustment is like no adjustment needed, register the new info, I'm good, doesn't change my thesis. Okay. But like, think about it. I don't know. And plus I say the same thing every time. I don't know where the price is going. I'm not going to do you the disservice of making up a number and guessing. Sorry if that bothers you, but I am open to changing my mind when presented with new information because I'm not an idiot. Case closed.
Case closed. Ladies and gentlemen, Alex Popovich, Solano Cruz in the comments says, Alex, tell us how you really feel.
I do every day.
I will absolutely die on this hill.
Also, shout out to our friend Doug, co-host of Rise Up Market Watch, who's here in the comments. I see him
Vibe trader extraordinaire
of your technical analysis questions. So 140 characters at a time, Doug. You're helping us out. We really appreciate you, brother. And I'm also pleased to tell you that our guest for today has arrived. We've got him backstage, and I'm so excited to have him back. He is the most appearing guest now on the Rise Up Morning Show. It is a very precious title, but it is only his. And Alex was saying last night, it's very cool when you get to experience someone's work, their thought leadership, and think to yourself, man, it'd be great to have a conversation with them. I'd love to host them for an interview. And now he's agreed to be so generous with his time as to come back and help us all learn together. What a thing, right? Mm-hmm. Ladies and gentlemen, please welcome back to the show, all the time investor, sometimes DJ, don't call him an entrepreneur, our friend, Mr. William Quigley. William, it's good to see you back on the Rise Up Morning Show. How are you?
It feels like I never left.
Well, we appreciate you for making time today. It looks like you're back in Florida and maybe getting a little more sunshine than we are, yeah?
Absolutely. I am indeed getting more sunshine. It's always sunny here.
I'm glad to hear it. How's the bear?
The bear left. I think he's going into hibernation.
Excellent.
Is that a forward-looking statement about markets? One of the questions I wanted to ask you is, when you were here last time, you said, you didn't expect to see a lot of, activity. You just heard us get done saying things change in how we see the markets all the time.
Indeed.
But do you stand by the thesis you unpacked for us that probably we won't see a lot of the macro stuff that's bullish come to bear the rate cuts effects until early 2026? Are you feeling a little more bullish about October, about Christmas time? How have things changed for you as you look at the market since you were here last?
I would say they really haven't changed at all, from the perspective that it was an 18-month planned bull market. It just didn't show up. And we are at the tail end, guys. This November will be the 18 months since the April 2024 halving. And it just didn't work out the way it has historically. But as we've talked about, we only had 3 data points, right? So whatever. We're on a different path now. The big question has always been, if you don't get the bull market, do you get a bad bear market? And I don't feel like, from a crypto perspective, there's anything foretelling a typical 70% retreat that we normally see at the end of a bear market, or I'm sorry, of a bull market. But having said that, as we discussed, crypto is now just bolted onto the traditional stock market. So the traditional stock market is, in my lifetime has only been higher valued once, and I'm pretty old. We're now at a 40 PE. That's concerning. Every time I see something like this, I see something like that. So everything is up a lot, and so I would say that to me is what people here should be thinking about. If the traditional stock market just starts to get very shaky, just understand, so will crypto.
Easily forgotten sometimes when there's euphoria in the air, or just when people are distracted by the next shiny thing.
When you think, I'll go to my my safe harbor, right? The stock market's not doing well. Well, crypto is uncorrelated. If you went to sleep 5 years ago and you woke up today, that would be very reasonable assumption, right? Oh yeah, it's not correlated. But now it is. So we have to be cautious about that.
So putting the markets aside for a second, there's still a lot of exciting stuff happening in crypto. Some of the stuff we've talked about in the past, if you're unfamiliar with William's thought work, you can check out his past episodes by just looking for William Quigley, the Rise Up Morning Show. Includes this future where all these different companies are going to have their own stablecoin. And I feel like those dominoes are just starting to fall over. And one of the companies I have been much more bullish on lately that I've just been excited to watch has been Stripe. Just kind of acqui-hiring all the pieces they need. They've got Bridge, they've got Privy, and they have done a lot of work. I think I heard the co-founder in an interview say something to the effect that after that bidding war over who would launch Hyperliquid's native token, when the winner was selected, they had already done the work with Stripe and Bridge specifically to get the infrastructure ready for the token that they launched it the next day. That they've got the contracts for so many different versions of, whatever kind of corporate stablecoin you might want, that all you got to do is basically call them. They're tested, they're audited, and they're launched. And it's a token you control. It's got your brand on it. And now something else we're starting to see is like all these TradFi and crypto companies with distribution. The one we looked at yesterday was MetaMask, either launching their own stablecoin or launching their own debit card, applying to become a bank, this like blending of we'll do it all for you financial services. And a friend of ours said something that Alex was talking about, it never occurred to him before. Wallets will be the new banks, just as a simple, concise way to share it. And would love your updated take on, all that has happened, because it seems like a lot has happened in the wake of Genius.
Yeah, well, to catch your audience up to speed, what we will see is stablecoins from every major consumer products company, eventually every major consumer product. I mean, the Walt Disney Company, right? I think any company that has, right now I'm going to say 50 million plus users, subscribers, customers, however you want to categorize them, but it'll get to 1 million at some point. And the reason is, for all the reasons I've talked about stablecoins in the past, they're such a perfect tool for any company that is responsible for settling transactions, particularly ones cross-border. So, a real obvious one will be Amazon, right? So I can't imagine Amazon is like sitting back going, oh, why would we ever want to do this? They've always been about finding some routine thing like logistics and then saying, how can we squeeze costs out of that? How can we make it better and faster? Well, this is an obvious area, right? Payments is an obvious area for them. So they will do this. really, I say there'll be thousands of stable coins, but it could be millions of stable coins eventually. And if that's the case, then it upends all of the traditional payment companies. There's so many. You mentioned Stripe, but there's so many. There's guys like TransferWise, obviously PayPal, the old line like Western Union. There's just an endless number of companies that facilitate payments, particularly cross-border payments, and then all the traditional banks, of course, they'll do this as well. So, and that will eventually, you won't think of stablecoins as crypto. You'll just think of them as part of how we do stuff. So that's coming. All the world's global economies will have central bank digital currencies, that just basically tokenized currency that will happen as well. And for me, the big question for me is, where will these things be birthed and traded? Right now, money is so tightly controlled. You can't just take it out of a bank. Even tokenizing currency was a very difficult thing to do, as we did at Tether. It was the banks and the governments didn't like it. Now they're getting used to it. But there are so many places, there's so many financial institutions that have been very happy having a monopoly on, at the time, was digital currency and all the licensing that's needed. So a lot is going to change, and whether or not people wind up doing these peer-to-peer payments, I think that's a very small part of it. That was, of course, always the goal for us, that we would democratize money and everybody would just do peer-to-peer. But I think that will be a small part, because for the most part, most money flows go from a big company to something small, a big bank to you as an individual. It's not really a peer-to-peer kind of thing. But if it ever got there, it would be done via stablecoins.
Yeah, something else I have seen just recently. I don't know that we've ever asked you about this, William, but are you hip to the presence of all these narratives around ISO and XRP and other tokens that begin with X?
I'm not familiar with that. Tell me.
Alex, back me up on this. The prominent narrative, especially on like social media, is that these tokens, they are going to form ISO aligned tokens. There was this I forget who released that report. Alex, you remember forever ago where they were like, we're updating these standards for communications for financial information, and here are some examples of cryptocurrency tokens that are aligned with our messaging standards, and someday soon everything will need to be. And it was like XLM and Algorand, just a couple of other tokens that are like names you would know, but they are not particularly active chains. They're niche chains. They're doing stuff, but the narrative is like, these coins are going to be everywhere. They're going to be everything. The whole future of banking is going to be on these blockchains, nowhere else. XRP. There are these rumors, William, on social media. They have all these wild cases. They pull these data points that XRP is going to go to $520, $1,000, $10,000 a token. And they seriously,
but these are innumerate people. Come on.
But there are many, many, many of them. And and not that they're driving the boat, right? But they it's difficult to speak truth to them. And November 22nd is a day that's coming up that people are talking about. That's the day. It's the deadline for like these ISO messaging standards. Swift is going to adopt them if you don't use them, right? And the other thing is, Swift recently announced that it's going to be exploring building a ledger on a blockchain with consensus on Linnea. And all these people were like, oh no, but it's going to have to use XRP for liquidity. Only the XRPL has on-demand liquidity for this kind of thing. That's a very prominent part of this narrative, is that XRP has, black pools, dark pools, like many chains do, the ability to build a closed or permission network like on top of your open one if you want to build, and that they've got all this money behind the scenes that's buying up these tokens that's going to need them when on November 22nd this switch is flipped. I guess I don't know what the question is, except to bring it back to stablecoins. Something I find myself saying to these people that seems like a light bulb to me, like I don't know how you could refute this, is doesn't it seem more likely that Swift and banks like JP Morgan or Chase, who are already on chain, who already have their own like blockchains or tokens or whatever, who already do this, that they're going to use either some kind of tokenized fiat deposit, their own stablecoin token, a regulated stablecoin like Tether, like USDC, whatever, USAT, before they would go to a crypto native asset with a volatile price to settle any kind of significant debt. I feel like that is obvious.
And you
but
are
I
right.
want to help these people like see that, because I really worry about the decisions that folks are making based on, I mean, it's their money, they can do whatever they want, but a lot of people are betting the whole farm, the whole house, and it leaves them susceptible to like conspiracy thinking.
Yeah.
You know, and they trust us to help, but I struggle to find like a helpful thing to say that just, you know, is like the light bulb.
Yeah, I guess all you can say is, I mean, I've been listening to this nonsense around XRP for what, over 10 years. The idea that you need XRP, which is in the blockchain, to settle like any transaction is so wild to me. Like, if it was going to be adopted, it would have been adopted. It would have been adopted when there was nothing else like it. So now there's a million things like it and newer things. Why would that work? This is an area of crypto that is the part of the story that's so hard for traditional finance people and other people who think logically to understand, because these are cults, right? They're little cults, and you get your cult following. It's going to happen this year, and I've always likened it to these die-hard fans around sports teams, where any rational person says you're a shitty, like small market team, you're never going to go anywhere. And yet every year, you know, you get your season ticket holder who says this is the year. And because crypto prices are driven solely by sentiment, you know, a small number of people can drive the price up or, you know, or down. Unlike a company, which in the short term, yeah, can be driven up by hype, but in the long term, it's about its cash flow. So that really makes it so that these stories can persist forever. I also have never seen a area of investing where the faith of the loyal followers of some token keep that faith for year after year after year. You know, you don't see people saying, okay, I guess it's not going to happen. That is by the way, it's an amazing thing if you're building in that environment, because you can always say, you know, one day, and people get excited. But it's just impossible for me to see how any of those tokens, and like the ISO standards body certifying some communications protocol, the idea that would matter to anybody, I just don't know. Like that doesn't make sense to me. At the end of the day, I see it a little bit like crypto or internet stocks. For, you know, your guys, now that's whatever, what is that, 30 years ago, when the, you know, kind of internet 1.0 started. But there was a point early on, I was part of it. I was part of Idea Lab, the most prolific incubator of companies back in the Web 1.0. And there were major corporations that were afraid of the internet. And so they would partner with people who were internet savvy. And so like Walmart said, why don't you VCs and some tech guys in Silicon Valley launch like a website for us? We did this with PetSmart,
Okay.
my incubator. And if you think about it now, can you imagine a giant corporation saying, wow, we have to build a website? That seems impossibly hard. Let's partner with someone who has that capability. Well, now how do companies launch websites? They operate their own, right? This is the same with blockchains. Blockchains can be spooled up in 15 minutes. Like, why would you use someone else's if you're a company? So I don't see any of the large companies using these existing blockchains in the long run, which doesn't mean the existing blockchains go away. It just means the big companies are going to have their own stuff, and blockchain native people and whatnot will use their stuff. I see it as them coexisting. But when it comes to the movement of money, the traditional banks will all do that through their own blockchains. Now, someone's going to say, no, they're going to use Ethereum. They may write transactions to Ethereum. Who gives a shit, right? But even that would end at some point. I just don't see, that should not be the narrative, I guess is what I would say, these things going up forever. JP Morgan isn't going to use XRP as its in-house backbone for moving money. It's just not going to happen.
Now, I'm curious what you say about Ethereum, though, because I feel like it would be tough, even for somebody like JP Morgan. Maybe I don't understand the scale of it. In a world where Amazon's got like 33 locations with, hundreds of servers each all around the globe, maybe they could, a JP Morgan could build a sufficiently secure and like robust network that is decentralized enough. I understand it's a benefit of Ethereum specifically that it is so decentralized. The nature of like staking makes it so secure, and the nature of its openness and whatnot, at least for now, the developed standards makes it possible for somebody to build something, if not a layer 2, something EVM that would almost certainly be better than anything somebody would just spin up or, on another network that they start from scratch.
Yeah. And it's just not the case. I'll tell you why. Blockchains over purchase, if you will, security by a factor of like 1 million, right? Like the amount of security you get in a blockchain versus a traditional client server architecture is infinitely different, right? But you don't need it to be infinitely different. Once you get like, a 5 in security, a 5 trillion in security is not needed, right? You've got a password with 10 characters, 15 is better, 30 is better. How about 30,000? There comes a point where, it's more secure, but it's more than you need. JP Morgan, to use that example again, wires money back and forth around the world. They've been doing that for whatever, since they started. They have servers that they use to do that. They have Swift network protocols that they follow to do that. Like that's not hard. You want to spin up, if 3 of us wanted to spin up a blockchain tomorrow, we could spin up a blockchain tomorrow. It could be run by a bunch of different validators around the world. There's professional validators, guys who will just like, oh, okay, I'll mine that one, or I'll mine that one. So I'm not belittling it. I'm just saying, though, that these things are not hard to do.
But I think the network effects are non-trivial. And I understand what you say about security, but what about, for example, I suppose you could just make it EVM compatible. That's what you would maybe suggest in a world where people are building dApps and things like that. Wouldn't the advantage for somebody like JP Morgan be that their partner bank is also built on a system that it's easier for them to talk to, easier to verify, or for Congress? Wouldn't it be a benefit that instead of all these different siloed systems, if there's a collapse that we have to spend way too much money looking into to assess the damage, we could just say in one place, verify what's happening?
It would be nice, but it's never happened in the history of the world, right? Like never, and it never will, because there's too many people with special interests. Like we should all use one protocol, to do whatever. Look at the banking system, like trying to trace a wire, impossible, because all the banks use different systems. Banks themselves use different systems within the same bank.
Sure. Yeah.
Like literally within I used to be a bank auditor. Like you could have 200 different systems, all from different acquisitions.
God.
And you're like, well, wouldn't you want to change it? Yeah, I guess you would, but it's not a priority if it's working, right? So I think the Federal Reserve Bank, central banks will be important here, what they want to do and what they do. So if you got like some new FedWire system and it's using a certain blockchain that will almost certainly be its own private blockchain, everyone's just going to say, well, we'll just all revert to that, right? I just don't think this stuff matters, to be honest. I think there's a lot of Excel spreadsheets in the world. They use different formulas to get to their calculations. You don't need to reconcile the formulas, like everybody's fine with how shit works. What really matters in this market is liquidity. And if you have a stable coin that a lot of people are using, then more people will continue to use it.
Sure.
Most of these things will be also, it's hard to kind of in this format explain it all, but there's silos, right? So PayPal has its stable coin, whatever. Just call it a gift card, guys. That's what these are. These are that's how they set them up on their servers. They just use whatever they do for gift cards, they use for this. It's kind of the same thing. It's a stored value. You can redeem it. They recognize it. But existing outside of their network is hard, because then it's like, well, how do we know that this is entitled to the value that PayPal is saying exists? We've always had this problem, right? Where you create a tokenized version of a coin on Ethereum or on some other chain. Well, at the end of the day, you've got to be able to go back and say, is this actually real? Does its original collateral exist on the native chain from where it was originally born? That's the sort of stuff you want to care about. And banks are going to be very wary of this, right? It's like if you go back to the 1860s, 70s, before there was a national banking system, people would show up and say, oh, I have this basically cashier's check. Can I deposit it in your bank? It was issued by a bank in Illinois and I'm in New York. And, sometimes they would give you credit for that. And a lot of times this was fake. The same sort of problem exists with banks recognizing different stable coins, which is why I think for a lot of these big institutions, they will just have their own captive coins. And then something akin to a FedWire cooperative will be responsible for exchanging them, but they will only exchange with the smart contracts that they recognize as legitimate issuers of legitimate tokens.
Right. The USDTs, the USATs, the Tether.
Yes, you'll have to be invited into that system, and they'll say, okay, this smart contract, that's a legit smart contract.
Yeah.
So, we're going to allow that to be exchanged at whatever the exchange rate is. That's how I see it working.
Somebody explained it that it has to be that way because mostly they're not gonna use to go back to Ripple. They're not going to use Ripple's token that some startup company somewhere controls when what they want is the ability to control the money in their system. And a token lets you freeze, lets you move, lets you what it's your token, it's your contract essentially. If you're
exactly, and that's baked into the stablecoin legislation. You have to be able to, by the law, you have to be able to freeze transactions, right? So, which, you know, for guys like us, we don't like that, right? Because that goes back to, well, then I don't own the money.
Right.
If some third party for no reason can just say, well, we're, you know, your transactions look suspicious, we're going to freeze your account. We don't like that.
Well, and I think for people who are unfamiliar with you, William, that's probably, don't let me put words in your mouth. That's why you always say these are not really stable coins. They're points.
They're not stable coins in the way we think about them, right? Like you have the Tether, clearly, you have make or die, right? Like that is a cool concept, right? I've always tipped my hat to the make or die people. Like being able to mint your own stablecoin, and for us to say we'll accept that because we know the way the collateral system works, it's good money, right? The problem with this is the why can't this exist in a very big scale? For the same reason central banks cannot have gold-backed currency, because there's not enough gold for where the money supply needs to go. You know, there's not enough of these tokenized assets. All of crypto in total is only worth $4 trillion, right?
Yeah.
So you couldn't even do the U.S. money supply. So it's never going to be a big thing. But for small DeFi operators, for person to person, I think make or die is pretty cool.
Yeah. Alex, this seems like a good point to bring it back around to this question of, like, you know, decentralized, open versus closed. Like, what did we all come here for? Go for it.
There's a lot.
There's a lot.
In the question about, you know, taking it all the way back, you know, everyone making their own stablecoin, there was some comments kind of back and forth about whether or not that means that everything would become diluted. I mean, I think if it's not now, it wouldn't be then, because we are thinking about stablecoins as being kind of like the same thing. By that I mean, you know, if you look at USDT and USDC right next to each other, those are pretty good example of something that's a competing product, right? They effectively do the same thing. There's some nuance to the structure and the various methodologies for backing this up and that, and who can use what, where, when, and all that kind of shit. But effectively, it's the same type of product. But it doesn't have to be that way. And I think a good example to highlight what I mean by that would be, you know, us talking about a cryptocurrency that is exclusively meant to serve as a vehicle for speculation on a new startup versus the way that DeFi Carrot built theirs to do something extremely specific and have like a tokenized version of this one specific thing that's not meant to behave the same way. Theoretically, a stablecoin doesn't have to do the same thing as USDC. It's not like every company that wants to make one would be creating a USDC, or even a product that's meant to compete with those things. Could be much more synergistic. I think, honestly, though, this I would think about it more like every company that currently has a loyalty rewards program of any kind, whether it's American Express points or Delta Sky Miles or whatever, that's their stable coin. The difference would be whether or not you tokenize it. And then, of course, I harken back to a famous quote by Eric Schmidt, who we just talked about yesterday, former CEO of Google, crypto investor, all that good stuff, who said, you know, the internet is the first thing that we have invented that we don't understand. This is the same thing. This is the next iteration of that, right? And we're talking about evolving the internet, so it makes sense. I don't think any of those companies talking about creating their own stablecoin fully grasp what they're actually considering doing, because as soon as it's tokenized, someone will make a bridge to more easily transfer American Express points into Delta Sky Miles, and all of a sudden there will be liquidity pools, and someone will be able to leverage their Delta Sky Miles to exponentially increase the number of American Express points that they have, which would then have increased utility inside that ecosystem. So I think as soon as you understand that, it kind of comes back to what you were saying about XRP, William, that like it really just doesn't make sense from a company perspective to give us that much freedom and permission to use their own system in that way, in a way that's so beneficial for us. Because no company would ever be able to sit their board down and say, guys, I've got a great idea for how to use this new technology. Let's decrease our margins by a metric shitload and give everyone a lot more power over the system that we have carefully constructed over the last how many years. It just doesn't make any sense, and it would never happen that way. And why would any other company give up their slice of the pie to then use someone else's technology to increase that person's margins while decreasing theirs? That's like the worst business decision you could possibly come up with.
Okay, but Alex and William, don't you guys think, I'm thinking about what William said forever ago, the first time we saw you, about how incumbents will do that because they must protect the way things are.
Yeah.
And it is a more competitive product, I think, necessarily to evolve or innovate something that says, okay, let's grow the pie. And maybe we do it by giving people the option to do a derivative of their American Express points that they can leverage in arbitrage or whatever. It creates I would say, a more efficient, a bigger market for people to participate in. And that seems more competitive to me.
I think so. And I think from a brand perspective, it could be really good for them to open up like that and get, get the passion of the people fired up to participate in this new thing that they're now letting us do. Empower your customer, create a more emboldened, more excited, more loyal customer, right? But I just don't think that they're considering the fact that, look at integrations that exist already right now. My American Express card is plugged into my Amazon account. My American Express points are directly spendable on Amazon. I don't have to spend money. I can just buy things with points. You have enough to cover whatever it is. They have the dollar value equivalent published right there on the checkout page on Amazon. You can just say pay with points, boom, done, reduces the value to zero. None of my cards get charged. My points balance goes down. What if I have a way to, without spending any money, that makes American Express any money by using my charge cards with them? What if I just can take all my Starbucks loyalty points that I've also never spent and go farm them in some sort of, bridge DeFi protocol?
Peer-to-peer facilitated by Code Network.
Yeah. And then what if I can manage to exploit that bridge and all of a sudden I have 20 billion American Express points and I can buy hundreds of thousands of dollars worth of stuff on Amazon before anyone gets a hold of me because I cheated the system? I mean, I don't know. It just, to me, I have to believe that someone at that company is thinking about that potential, or if they're not, they're going to once it happens.
Yeah. I would say this to you. All the stuff you said is true. If I were advising some big companies, I would tell them there are really good proxies for what is going to happen if it's like this open system and all that. And in my old industry, the video gaming industry, right, particularly video game virtual item trading, you have a bunch of closed systems. Think of them as all the banks or the big companies, and they create these virtual items, and they cannot stand if you try to trade those among yourselves, and they sure as shit don't like it when you create a synthetic version of it in another universe and want to trade that, because that's out of their control. It affects how they price it. And the same goes with credit or with a debit, gift cards, with gift cards. Tons of companies in my old industry, the video game virtual item trading industry, they would accept as payment gift cards, the digital gift card. And those gift cards had different market values. A well-known brand may trade at 92 cents on the dollar. A shittier brand may trade at 60 cents and so forth. But none of the original issuers ever like that. It just bugs them that there's all this different valuations floating around. They particularly don't like it, and you kind of hinted at this, when the people who most love to take your points or whatever digital thing you have that has value and allow transactions to be settled against it are the gambling companies, because online gambling companies have very difficult time getting payment systems to work with them, because those payment companies are worried that they're violating some regulation somewhere, right? And so if you have a lot of companies issuing things like stablecoins, and those are being used in online gambling, and they're being used just to be traded, and maybe even have the price manipulated, which crypto people love to do, that's going to affect these companies. And eventually they're going to go, damn it, we need to rein in this stuff.
Sure.
And that's why when I talk about these sort of like semi-closed systems and they won't be permissionless, I'm just jumping to the end, because I've seen this in video games for 25 years. They all hate that somebody's trading their stuff. And so, yeah, that's the reason. I mean, you guys probably remember this, but 5 years ago, the principal narrative among these crypto people was that all the big companies were going to get on Ethereum or get on Bitcoin or something. And it was preposterous to me that central banks were going to issue stuff through those chains. They can't do that because they can't get the control. And that's, at the end of the day, they want the control. So, you know, I don't know when it's going to happen, but they'll start to lock down who can use what.
Okay, William, I want to kind of pivot in a slightly different direction.
Sure.
Because we have a longtime friend of the show who has started to cultivate an online anonymous personality around his trading. He's a very successful trader, and he is an entrepreneur. He's been a business owner in several industries and has really done great work with his life. And now he's in crypto, and he's become popular online as the white whale. He is the #1 perpetuals trader on Hyperliquid or pretty much any other decentralized platform on this blue planet. He's got a 9-figure account. Who knows what his net worth is? But his next play, because who wants to sit in a perpetuals casino forever, is he's interested in exploring ways to strategically invest in and advise startups in the crypto space. And you, better than anybody, know that there are lots of ways to go about investing. You could buy spot, you could play perpetuals, you can write checks early, you can write checks late. Yep. And I'm just curious, you've talked before about like your philosophy for betting on winners, but if you were like starting not totally from scratch, he's becoming more crypto native in the last few years, but is newer here and has invested in companies before, has experience, but is newer to the crypto startup game. I happen to know he's been interested in DeFi protocols, thinks that there's a lot of room for innovation there, thinks there's a lot of room for innovating the user experience of consumer-facing products, because none of those are optimized for the next wave of users everybody talks about. But if you had, I don't know, $100 million, and that was your game, and you wanted to, would you start a fund? Would you be a solo angel? Do you have any advice for someone like that? Because I just can't give advice from that perspective. I wouldn't know even where to start. What would you say to someone like that?
Well, okay. I guess I would say, so you're doing well. Let's assume he's doing well in his existing business. Let's assume he has a lot of money. And now he's like, I would like to do more. I see opportunities. The startup business, no, I would say he should avoid that. That would be a bad idea. It doesn't sound like he's ever really he hasn't spent years like filtering through business plans and ideas, meeting with teams. That also, the guy's a trader, but so I already know this guy's #1 love is liquidity. Right. And there's zero liquidity in a startup, in equity. So I would tell them, stay clear of that, not your wheelhouse. On the other hand, what I would say is look at people who are have successfully launched a DeFi system, some new smart contract, adding some capability in DeFi. Those guys are always looking for liquidity. And so perhaps he could work with existing businesses and say, I can be kind of like your credit facility, and be rewarded for that, not equity, but being paid out from the company's profits, let's say.
The revenue.
And that's a very good place. If you can write checks, if you can bring liquidity, you can get a lot for that from emerging new DeFi systems. So that would be very attractive to me if I were him. And I think he is right. Like, DeFi is it's limited only by how creative we are, and we're infinitely creative. So, and the principles around DeFi are very simple. It's basically leverage, right? It's new ways to do leverage. And so that will always be an attractive area. I think the big investment banks and the big financial institutions will never be that interesting when it comes to DeFi, because they're not going to be bold, because they can't be. They have to be conservative. So the Wild West is like these private companies doing stuff in the DeFi space. That's probably the most interesting thing to do.
Yeah. He has, I know, been focused on like Hyperliquid's ecosystem, Solana's ecosystem, because it's a little more developed and robust. He's done some sort of work for DeFi Tuna is a new protocol that's been taking some revenue away from Orca, and has really enjoyed interfacing with the team. I think for him, it's about, bringing a better product to people, and also the deep liquidity that doesn't require so much, intraday management, but is more like, about really building something neat, something creative. He likes business, likes solving problems. And so,
so he's gonna, I don't know how old this guy is, but he, as an old guy, I would tell him, don't look for your occupation to be your source of entertainment. That's a bad idea. Okay. This happens all the time with rich guys. They get a bunch of money and then they're like, well, I'm kind of bored with this cardboard box manufacturing company that gives me $1 million a month. I'm bored with it. I want to do something else. What if I could like bolt on a streaming company to it? You know what I mean? Like, that's how these guys get into trouble. Your boring ass business is what you should focus on for whatever. And then if you want to like have fun, then you have a fun budget and you fuck around with that. Unlikely the fun budget ever amounts to anything, by the way. You're probably just going to waste your money. But because most people in life make it once, most people have one success. I'm talking big success. You can say, look at Elon. Yeah, well, we look at Elon because he's very unusual. But in my experience as a VC over decades, most of the time, because when you started that company, and this goes to how much is it effort and how much is it what we'll call, luck, which is just randomness. It's, I think I've told you guys, the older I get, the more I ascribe the successful outcome to randomness. Mm-hmm. And there's some, I've seen some pretty good literature about this phenomenon where they've used different models to test how important is a random outcome. For instance, you want to be an astronaut and you want to get into the NASA astronaut program. Well, turns out there's around 20,000 applicants a year and they take like 11 people. And it turns out about 95% of whether you get selected is luck. Now, none of the people in that program got their PhDs want to say it's luck, but the reality is, if you look, it's random whether or not you get there or not.
Sure.
And it's the same with investing.
Yeah.
It's the same with it, or being a startup guy. There's a big part of randomness to it, and so he's been successful in one area. What I would say to him is, look at what's tangential to that and see if you can expand it, right? But don't go whole hog like to something completely different. Yeah, because it generally just doesn't work out. And if you do, for your audience, if you guys are like, oh, I'm really interested in doing startups or in doing angel investing, you need like 15 to 20 bets for that random distribution to actually work in your favor.
Yeah. Meaning most of them are going to fail.
Yeah. And then look, I educated my teams for decades about how to do this. And the most important thing, to show you my philosophy on this, I believe the almost the only decision that matters when you invest in a startup and then try to grow it to an IPO is the day you write the check. Do you write it? Everything that follows that is noise. I'm sure the VCs are out there saying that's not true. I spent 9 years on the board and you were irrelevant. It doesn't matter.
I heard a biography of Henry Ford that was talking about his early investor. I think his name was like Anderson, something Anderson, wrote a $10,000 check to Henry Ford and got a seat on the board. And he undoubtedly that day made a supremely valuable contribution to be the lead investor in this company. But Henry Ford described him later as a parasite because in Henry Ford's opinion, he got in the way of the operation of the company with his ideas. Henry Ford wanted control. This guy wanted to have some input and say, and he said, listen, man, your money was great, but tell your story walking.
Yeah, that it's so true. I've seen this. I've been on so many boards over my life. Like I grew to be kind of much more just like, you guys have a plan. You're thinking about your business 60 hours a week at least. I'm thinking about it once a month when I'm eating my muffin at your board meeting. What could I possibly do? Now there are things. Oh, you're looking for a head of sales. I know a guy. That's useful. Oh, you need more financing. Those things are useful, but they're very narrow. And I used to know one of my tells that the company was going to fail was when the board was getting very prescriptive about the strategy of the company. I just knew that was bad. If your board is telling you how to run the company, where to take it, it's just bad. So in the end, to me, the best thing to do was to write the check and say, call me if it's going public, and if not, oh well, I took a gamble, it didn't pay off.
Fascinating. That's fascinating.
Yeah.
I'm sure he's listening, and I'm really curious to hear what his feedback will be on that. Alex, you look like you got a thought there, a twinkle. You've been quiet today, Alex.
A lot of comments. I don't know. I just think it's so interesting because it's really easy to get swept up in like the excitement and the hype of like all these like huge companies and names that we know have made a ton of money, like getting involved in the startup investments that you're making. And it's like easy to let that make you believe that like you're on the right track, even if they have a completely ulterior motive in getting involved. And I just like, I'm sitting here chewing on the battle, the inevitable battle between like TradFi and DeFi versus, like what we've seen literally conferences built on right now, which is this beautiful merging of the two systems together when like inherently they have completely different motives.
Very true.
Extraction versus distribution. And it's so interesting to see like who you think would emerge from that clash victorious. And I think that, I don't know, that's kind of just like the thing I'm working through in my head, especially listening to you talk, William, about, the desire of these different things to keep stuff siloed, but like try to use a new piece of tech in their siloing, of their own systems. It doesn't make sense to put everything on the same place because, XYZ, whatever. And I don't know, it's hard to imagine that the incumbents can't even have the potential to come away as the winner, even if it may seem like they have all the power and hold all the cards right now. Because again, I just think they genuinely don't understand exactly what they're tangling with. I don't think we necessarily do either.
But I would say this, they're totally different realities, right? Traditional finance deals with a total different reality. The major US banks, what they call the systemically important banks, those they create money. They're part of the money creation process of the US government. So, they're going to be around forever. And when the US government says you must exist forever, it's kind of hard to compete with that. Okay.
Yeah.
You will see, I am sure you will see lots of M&A. Unlike every sector I have followed, call it in 40 years of being kind of in and out of the market, crypto has been shockingly low in the amount of M&A that has taken place.
Yes.
And I think, for two reasons. The big companies, from a regulatory standpoint, this looked like a third rail, so they didn't want to get involved. And then it is an open source movement. Open source is free. So you literally just take a copy of that thing and use it. So those are the reasons kind of why we haven't seen the M&A.
Yeah.
But it really stands out as kind of strange that there has been so little.
It's super weird.
And when you look at you kind of hinted at it, but like, what are this is something I had to learn the hard way by getting abused by big companies. When a big company wanted to invest in your startup, it was never good. I learned this. If you have no one else who wants to give you money, fine, take the money from the corporate investor. But corporate investors, the return on capital is never the reason they invest. They basically want you as an outsourced dev shop to do stuff for them, right? And so I would say to any entrepreneur thinking about taking money from a big company, if they're going to buy you, you can be their W-2. If they're just investing, you're never going to be successful because you're doing work for some big company. You're just an outsourced subcontractor. That's not an interesting way to go.
Yeah.
And it reminds me of when Mark Zuckerberg, maybe he was told this by smart people, but when his company, when Facebook was not yet gigantic, but it was growing really fast, big companies started calling his business and saying, hey, we're going to launch a site on Facebook, but here's what we need you to do. And here's the team we need. And he was like, oh, it's pretty easy. You just go online, you register, and you can have a site. And that was it. And that was very smart. And a lot of them said, screw this, until, a couple of years later when they were like, fuck, we just have to be on Facebook. And that was that. He could have just been suffocated by suddenly all of his engineering team doing this shitty one-off projects for big companies so he could issue press releases, say, look who's on. But he was smart enough to say, no, that's not going to help me. You guys will bend to what I want to do, not the other way around. And by the way, I would also say, you might see a lot of big, like the JP Morgan example I give you, you might see those guys doing stuff with other blockchains. If I were at JP Morgan at a senior level, I would be trying to figure out, is that because these engineers want to fuck around with Ethereum? Is that because they just oh, you know what? I'd like to put that I'm smart with these different blockchains on my LinkedIn. Right, yeah. That is a massive influence on engineering teams, massive influence. I see it all the time where they're like, oh, this has nothing to do with your long-term strategy as a company, but they just want to get involved with it. By the way, I did see that with Ethereum in like 2020. Big companies like Microsoft, and I was talking to some of those engineers, and I'm like, yeah, but this isn't going to do what you need it to do. Yeah, but this is what people want to see. But what it really was, these engineers wanted to say, look at me, right? Everyone has a self-interest, and it makes things very confusing.
A lot of commenters are having a really fun time, and some of my favorites. Bearded says about being an advisor, CEO is pouring his heart out about hard work, and board member says, man, these blueberry muffins are great. And also Rada says, William, we get to hear a different perspective today. We love you, and they definitely do appreciate you. And I just want to know, as we start to like wrap things up here, before we get a final thought from you, you said a second ago about, don't seek your fun where you work. You get your boring cardboard business, and then you have your fun money. So I'm curious, you often say that you're an old guy. You clearly have been around successful people. You're a successful person yourself in the sense that you have touched a lot of businesses, touched a lot of ideas that have come to fruition in the world. What do you do? This might be too personal a question. Shoot me down. But like, what do you do for your fun, William? Like, do you just sit around and talk about this stuff all the time? Because whenever I see you online, you're sharing ideas like this. I know you spend time in Miami and you spend time with the Bear in Aspen. But like, how do you do that? Yeah, you DJ.
He does weddings.
Yeah, I will say the number one thing I do is I engage in conversations with people doing stuff. That's true. That is my principal pastime. If I'm anywhere, I'm probably that awful guy you don't want to be around. I find the guy who's doing something cool and we talk about it. And so that is probably what I like to do best. Outside of that, I like to scuba, I like to ski, and yeah, I like to do music related stuff. So that's sort of it. But if I had to get rid of everything, it would be the last thing I would want to get rid of is confabs of smart people where we're just talking about what is going to happen. And to me, it's so evident to me that there's a group of people who matter a lot in the world, and then there's a lot of NPCs. That may not be politically correct, but that's how I see it. When I see young people just head down, just grinding, working on cool stuff, talking about it, and then I compare that to the vast majority of people who are smoking pot, watching Netflix, whatever, it's like, it will always be the case that there's a small number of people who are driving the future. They're leading us to that. And everyone else is kind of like, I used to think it was like something you could train people to be more of. I thought you could get people excited about stuff. Like when I'd be running companies, I'd say, why doesn't everybody think about where we need to go? Because almost no one wants to think that. There's a very small number of people who want to try to figure out what the future is going to look like. It's just a small number of people. Most people want to be told what to do. That's the bottom line. And so if you are one of those people who are finding this stuff really cool, I also think those people tend to do well in life. They do a lot better than people who just sit back. Every 10 years, there's some epic change in the world that, we have to adjust to. And we all know right now, that's like AI and other things going on. The idea that you can just get a job and learn a skill and then just go on autopilot, to me, is insanity. Especially right. Maybe you could have done that in the 1950s. I don't know, but you can't do that now. One of the reasons things like this are so great, podcasts are so great, is you're getting a lot of ideas percolating back and forth. I get a lot of ideas from watching podcasts, and listening to people. That 20 years ago, that was not as possible. There's a lot of shillers out there too, obviously. Yeah, so we're part of that, I think, kind of sharing stuff, and as crypto gets bigger and bigger, more people are entering the mix. But as I said earlier, I do think we're seeing this. There's like traditional finance people who are using this stuff in the way they want to use it, which is great, and then there's the crypto native people who are continuing to do really wild stuff, and that's more interesting to me.
What I take from that is that William, my next goal is for us to dive together.
Oh yeah, you're a diver. Good.
Absolutely, yeah.
You just wouldn't like where I dive though. I just know about it.
Well, okay, so I cut my teeth in Lake Superior. That's where I got every certification that I have. It was so cold all the time that I got ice diving on accident, because you actually don't need ice to ice dive. It's a water temp requirement, and as long as it's below a certain level, it's considered ice diving, even if there's no ice present. But no, I actually, the only thing I'm missing from Dive Master is the test. But I have tons of hours and all the certs, and I've done rec, deep water, mixed gas, advanced rescue, search and recovery, ice.
Yeah, you've done a lot. That's great. I was never much of a lake diver. I found it a little boring, but I know that that's a thing with Rex and the Midwest and all that. Yeah.
You know, I've done diving in Cuba and in St. Thomas, just on deployment. That was always my like port call escape. I would go find a shop and rent stuff and go dive. The most exciting and exhilarating moment in all of my diving, though, was in Lake Superior. We were doing a search and recovery with one of the local law enforcements up there. And we were underwater doing like just the acclimation, getting used to the fact that it is unbelievably cold down there. And that's when, fun fact, that's when everyone goes all the way down to the bottom and then pees themselves because it's that cold.
Oh my God.
Oh, were you in wetsuits?
Yeah.
Oh,
I've never dove in dry suits. Yeah, only wetsuits.
Oh, wow. That's wild. Like, yeah, even California, when I hit about 40 years old, I one day woke up and said, what the hell am I doing? I need a dry suit. And once I got a dry suit, I never went back.
I
didn't realize people would do wetsuits, like a 7 mil wetsuit in freaking Lake Spirit, or wherever you were. That's wild.
Yeah, that's hardcore.
Yeah. Well, and actually a large amount of iron in the water lowers the freezing point of the lake, and so it's possible to dive in water less than 30 degrees, which is shocking. The weirdest sensation ever is being in water less than 30 degrees and then coming out and walking barefoot and in shorts through knee-deep snow and not feeling it, or feeling like you're warming up because the water was that cold. It's crazy.
Right. I mean, to me, what I would tell, because I was an instructor, I would tell my students below like 55 degrees, you have to have that's Fahrenheit for you Celsius people. You have to have a dry suit. It's I learned all things about cold because when I was younger, I didn't have dry suits. But it eventually occurred to me, when you stop shivering, that's when you need to start to worry.
Yeah.
And up in Monterey Bay, after about 40 minutes, I would stop shivering, and then I'd be like, oh, okay, this is bad.
Yeah. No, it's very painful to be underwater for an extended period of time when it's that cold. But the most exhilarating thing I've ever experienced was in Lake Superior, and it was being down there and like sitting there getting acclimated and like going over the drill plans and getting cards sorted and all that kind of stuff, and having one of the sheriff's deputies that was down there like kind of move back and go to sit down, and turns out that the log we were all just sort of comfortable with being back there was a Great Lakes sturgeon, and seeing that just like get up and move, and you could feel the push from its tail when it went. It was nuts. It was like feet away from the single biggest fish I've ever seen in my life. It was crazy. Doing in the Great Lakes.
Yeah. We have a question. Have you ever seen a shark, William, on a dive? What does that look? I don't know. I don't know. again?
Yes.
Constantly.
Really? Oh my God.
Yeah.
Constantly.
My
But you
fiance
know,
is terrified of sharks, and now
Mhm.
she's never gonna let me go scuba diving. It's over.
Oh, dude.
there's no one gets bitten underwater. You get bitten when you're on the top. But yeah, off the coast of about 25 miles off the coast of San Francisco is a island chain called the Farallon Islands. Anyone
Okay.
from the Bay Area knows these. These are just like lunar rocks, right? It's just this. There's actually like a Forest Service or U.S. government group that has a building out there, but it's desolate as hell. But it's where all the big sharks go to feed because there's a seal rookery there, right? And they like to come, the great whites. And I lost my fear of being bitten by a great white from that experience. Now, we were in cages, but the reason I lost it was because I saw that thing, go by, and I was just like, I'm not going to feel anything.
Yeah.
This thing is just going to swallow me. Yeah. Watching the great whites circle that cage was so fascinating. How they they're so sneaky, right? You're looking out like this, right? And you see the shark go by, whatever. And then, so it went that way. So you're looking over here. And then a few seconds later, it comes up like this, right? So you're just like going here. And then suddenly from below, they're very, and then that gray skin against the gray California water. Yeah, you would never see it coming.
Wow.
But sure, there's lots, but generally you don't see great whites. That's incredibly rare unless you go for them. But you see other sharks, right? There's lots of other sharks around California.
One of my good friends was a combat diver in the Army, and they used to do drills. You launch out of submarines, you do ultra deep dives, and it just takes way too long to go down that low. So, get started in the sub, launch out, go down. They're doing a completely dark, navigation drill. So the only person with anything illuminated at all is the one in the front, and then everyone's tethered together. And then there's a final, a guy who's the last one. And you have a light, but you can't turn it on because you're supposed to be completely dark. And he just keeps feeling stuff bumping him. And there's fish and all kinds of stuff, whatever. And finally, he's like, all right, this is getting too weird. Something's grabbing a fin, turns the light on, turns it around. And there's just 6 or 7 bull sharks right behind him. And they're just following the group. But when you're that deep, you can't just go up. It takes a long time to ascend. You can't just start going up to the top or everybody will die. So, just very slowly then does everyone start to ascend, and all these sharks are just right underneath him the entire time. No one ever does anything. No one gets bit, nothing, but they're just following closely the entire time. And he said that was the most terrifying experience he's ever had in any of his military career.
At least he knew what it was. I've done night dives where something's been grabbing me, right?
Yep.
Pulling me into the kelp forest. Yeah, grabbing, pulling me, because it's like this, and it's there's no reason to turn around because it's whatever. I mean, you hope it's a seal, right? But, that's happened. It's happened.
What if it's a mermaid, William?
Yeah.
That's I could never. I mean, I would love to dive. I've always wanted to, but the thought that I'm underwater, it's dark, and something I would absolutely leave my body. I would leave the confines of the wet or dry suit and just immediately go to the afterlife.
There are plenty of ways to enjoy diving without having to be 1,000 feet below the surface in complete darkness on mixed gas.
Yeah.
Don't worry, we'll do a really nice little light, fun. I mean, shallow water diving, you even until you have your advanced, you never go below 35 feet down, so you always see the sun.
Oh my God, you guys!
There's nothing. There's not much to see below 60 feet, to be honest. So.
No, then it's more about the experience.
Yeah. So Evan, I'm going to put you down as probably a pass for the night diving in the kelp forest. Okay.
Yeah. Put me down as a pass for that. I'll just wave to you guys and keep the DJ company back home. Okay, we'll do a very quick round of final thoughts because we've got to go. We're about to start the after show in the Circle community. If you're not there, and if you're watching the show and you have a crypto question, you wish we'd talk about crypto more, or you feel overlooked because we didn't answer what you wanted to know, it's not personal. We're not mad, but we want you to go there because that's where the show lives 24/7. It's free to join. And whether you're trying to learn about crypto, investing, technology, it's like William said, the best thing to do is to surround yourself with people who are exploring these things, talking about this stuff. They aren't going to try and sell you on something. And that is the Rise Up community. The only thing missing is you. It's community.rums, R-U-M-S, HQ.com. Check us out there. Catch us for the Circle after show. Alex, William, we'll go to you first as our honored guest. Have you got a final thought, a word of wisdom before we ride our dogs and our ponies off into the sunset for the weekend? A literal pony. Go ahead. Anything? Or is there anything that people can do to catch up with your work? You got a, I don't know, scuba documentary coming out, something like that?
No.
DJ by day, diver by night.
Yeah. I'll leave with one thought, by the way. Like the crypto public companies have done very well relative to the price of BTC in the past year.
Yeah.
If you guys just go look, I'm not talking like the DATs, whatever.
No, but like Coinbase.
Coinbase, Circle, the mining companies, like Riot, like those companies have done very well, which is somewhat surprising to me. I would have thought natively holding the assets would have been better, but they've done very well.
I think Kraken is on the list to go public. I think Polymarket is on the list to go public after they've had, however many rounds of fundraising sometime soon.
But Polymarket is one of those ones. Remember there was a company that was a prediction marketplace. I'm trying to remember the guy's name, but that was started. It's an old one. It's like 2015. Can't think of the name of it, but I never thought those would go very far. I thought they were too illiquid, right? But Polymarket has demonstrated that there's a lot of people who want to bet on a lot of random stuff. And I could see that being a public company. Also a company that would probably get acquired by some larger player at some point as well.
Alex, you said SciCast?
Is it SciCast?
No.
Okay, I got one for you. Augur.
That's it. Augur. That is
Nailed
it.
Oh yeah, there you go.
That is a blast from the past.
So that was actually, I need you to give just one more final thought, because one of the things I wanted to ask you was about the interesting, you said you like being in rooms with people talking about interesting things. We got off on scuba diving, but could you rapid fire? The very first time you were on our show, you mentioned Urbit. That was a fun little rabbit hole because I actually hadn't heard of that one. But like, are there a couple ideas right now that in the rooms of cool people you're in, you get excited about? If you just had to give us a quick list, crypto public companies, maybe prediction markets, scuba diving.
The most recent one with Alex Kroons, the DeFi guy from 2020 who did Sonic. He did Flying Tulip recently.
Andre Cronje.
Cronje.
Yeah.
His name. So he just raised 200 million or something, to build another DeFi-ish thing. He's very much, by the way, done it right. He stays in his wheelhouse, right? So he's creating some DeFi trading, like marketplace platform that is, I think will do well. There'll be a lot of experimentation there.
I heard some interesting criticism of it. And
there probably is. Investors liked it because you could contribute, And then anytime you want your money back, they guarantee you getting your principal back. You can redeem whatever token you got for the original amount you paid. You know, now I assume that everybody can't redeem at once, but that's that gave a lot of people confidence in it. Yeah.
Lovely. Alex, what about you? You got a final thought for the audience before we ride off into the sunset this weekend?
Yeah, I was writing down my little, at this point, kind of fragmented, needs to be cleaned up and polished, but rabbit hole of this TradFi versus DeFi instead of the, conversation of how they would combine. And what I've come down to is this idea that TradFi, in order to remain the dominant way of doing things, relies on people not knowing things. Whereas the primary objective of decentralized finance is the goal to inform as many people about the way of money as humanly possible. And I think even though the wall of resistance that DeFi's quest to educate is going to come up against because of TradFi, even though that is really, really hard to surmount, and TradFi will put up a really good fight, once you know something, you can't unknow it. And so in my head, that means that DeFi's victory over TradFi is inevitable, even if it takes a very long time.
Okay.
Yeah, I think so too. And if it happens, already that we'll tell you about it. So everybody.
Evan, I have a question. Can I ask you one last question?
Nope. Of course you can. Of course you can.
What is Bitcoin going to finish the year at?
Oh man, we did this on a show a couple weeks ago.
Then tell me, what did you think? Give me a range.
I gotta look back at my number here and tell you what I think right now is I would not be surprised by, I think I said 138,000 is I was feeling bullish, higher than now. And to give you context, Alex, I remember you said 125, and Will, our other William, he said 162,414 based on just some Fibonacci numbers. And I would not be surprised at all if we hit that number. I definitely think I'm looking for gas in the tank, but I also am looking for reasons that this would be the final rally and Bitcoin's prepared to leave the party. What do you think? Did you remember last time that it was like over, but everyone was calling for the blow off top, and Ethereum, hit its high right after Bitcoin, and Solana had already peaked as well. So it's always different, and we've only got 3 data points.
Always different. But yeah, I could definitely see the post 18-month period. It's sort of still hanging on for a while because you do have a lot of buying from big institutions.
Rate cuts. I think that'll be big.
Yeah, only if the stock market goes down by a lot do I see crypto taking a dump. It's hard for me to know as well. But if I can say, do I expect it to be higher today than it's going to be in 1231 or lower? I do think there's more move upward, but 162 seems a lot. I think so too. 150 maybe for me. I don't know. Too many variables. Yeah. And Ethereum, Ethereum really didn't do much, right? It's below its.
My next target for Ethereum is actually like 5,200. That's kind of where I'm looking in a world where Bitcoin does that.
Before the retreat.
And Alex, you made the point. Well, not exactly 1231, because on 1231, the market's going down because everybody's selling for tax loss harvesting.
Gotta watch.
True. Yeah. Yeah.
But before the end of the year, that's kind of what I'm thinking. Ethereum's, it's had a rough time.
It has.
Sol is my horse before Ethereum is my horse to see interesting, and those are really the 3 I'm looking at. And then everything else is a beta play with like fun money or, whatever. And I'm a very active trader personally. We do the show. So if I hear something, I'm probably like early enough to like make a decision, but I don't know. I just don't like to be at my computer on my phone with my crypto stuff doing
stressful
too much.
Yeah, agreed. Okay.
He killed it. William, thank you as always for being a
Good.
fantastic guest.
Talk to you guys
We
this time.
appreciate you. And we'll catch you soon, okay?
All righty. Bye, guys.
All of you, thank you so much for being the very best part of what we do. Everybody, catch us in the community. Catch the podcast if you're listening to the live show. And the live show, if you're listening to the podcast, get the links at rumshq.com. Until next time, Alex, everybody, stay safe. Be well, my friends.